Okay, everyone. So today let's take a look at gold. I haven't looked at gold in a while, so guilty. But let's see what gold's saying and let's plan for the week ahead. The thing is, majority of the time I trade Bitcoin because I just love the way Bitcoin follows market structure. Like Bitcoin is probably one of my favorite currencies to trade. But gold's pretty nice as well, and when gold moves, it moves. So let's see what gold has been up to and how we're gonna capitalize on these markets this week. All right. So what has gold done? Well, gold has obviously had this massive flush up, and it's had this range. All right. It's set the range high. It's deviated that range high once. It's come to deviate it twice. The first deviation brought it down to the range low, but the second deviation did not. It did not come back for this demand. Instead, it came and had a fourth attempt at the high, resulting in a break in structure. Okay, so this is where we are as far as gold goes. So now we've had this break in structure. Now, what do we expect after a break in structure? Well, theoretically, what we expect after a break in structure, if we go to the whiteboard, is a classic retracement. All right. Oh, whiteboard is busy at the moment, so let's get rid of all of this. Let's say this is what's happening with gold, isn't it? So with gold, we've had that range. Gold has been playing around. It's come up. It's got to the range high. It's set the range low. It's come back up. It's deviated that range high, broken structure. It's come back for the range low. It's had that third attempt. It's also taken that previous high, so it's broken above it. It's changed structure. However, instead of it coming all the way down, it's decided to come all the way back up. Okay, so this isn't perfect. It's not picture perfect. I'm going to move this down here. I'm going to move this down here. I think this is more realistic. And I'm going to move this. Let's move this over here. Move this a little bit further down because I think it's more realistic. Um, Oops. Yeah, so this is more realistic. We're going to extend this range so it spans the entire region. And then gold has done this, hasn't it? It's broken structure, and then it's starting to sort of distribute here, isn't it? It's giving us this highs and lows, but it's not quite giving us the flush we want, the flurry we want all the way up, which is problematic, scary. Why? Because this screams at me at a potential period three. Now, if gold was to give us that massive flush up from that break, yes, that's great. We'll look for that retracement, at the last range and look to take that up. All right. But the fact that this breaking structure that we see here, yes, it was a breaking structure. Yes, it was. Gold broke through its all-time high, 100,000%. Yeah, but it wasn't a crazy break. Like if we measure, let's say this is the 50% line of this range. So what I mean by that is, oh, that's not very good. Now let's use a tool, right? We've got tools for a reason, so let's use a tool. So let's say this is the 50% line. Okay, this is about 50%. Let's say this is the next 50% of our range. This is the next 50%, okay, which is fine. All right. Let's see how much gold has broken above. Now, if we were to take the same measurement, you know, and juxtapose it here. Oops. Let's just take that back. All right. Do you know what? Let's do this on the actual chart. Let's do this on the chart so you can see this clearly. If we were to simply measure, if we were to measure this move from the bottom to the top, so what we can see is that we've got 8% move. All right, we've got 8% move. If we take the middle mark, we've got about a 4% move. And here, let's see what we've got. Here we've got about, it's not crazy, just almost about a 2% move, which isn't. You know what? It's not that bad. It's still a break. It's still a break. In my opinion, it's still a break. However, I would have liked to see a more of a decisive break, and a smooth retracement before we rallied up. Instead, what we've got here is this little bit of like an accumulator distribution going on here, which makes me think about the the one and only PO3. So we could potentially be having a PO3 here, where this is our accumulation. Okay, this is bearish, by the way. If this is our accumulation, so for our accumulation, let's call it accumulation. And then we'll say this is our manipulation, okay, where retail traders have been manipulated. So we're going to call that our manipulation phase. And therefore, we could potentially get a bearish expansion all the way down to the bottom. So bearish expansion. This would be our expansion phase, all right? So is this potentially what's going on? And the reasons for that would be reason number one, okay, we do have all these stop losses at the bottom. There's trendless, curve liquidity over here that could easily get swept. All these stop losses over here. There's people who long, especially these late longers. The people that decide to long at the top of a range. Can't believe you're doing that, right? So those would be quite easy stop losses to catch or catch out. Yeah. And we do have these zones here for potential sticking points with gold. All right. So definitely still areas to watch out for. Now this is the bearish scenario, right? This is the bearish scenario. Just a thought, just an idea. Okay, now if that was to be the play, what am I going to be looking out for as far as where we are right now in this manipulation phase? Well, if that was to be the case, I'm going to be looking at this manipulation phase as a range. All right, we can see that our range has been respected really well. Earlier, I believe this is a zone we're watching out for, wasn't it? This is a 30-minute zone we're watching out for. Look what price did. Price literally came into our zone and bang. So if you got into that trade, congratulations, all right? Now, if you had set a limit order on that trade, congratulations, that would have done really well. But I wouldn't recommend you do that on the regular, all right? Because that is gambling. Okay, that would have given you a nice 3.85 risk to reward. So what does that mean? That means if you risked 1,000, you would have made about $3.8 thousand. If you risked 10,000, you would have made about 38,000. Okay, so well done, well done. Now, actually, you would not have made that because you would have put your stop loss over here, which means you would have netted, I think, 2.47, 2.5. Okay, so 1K you get 2.5K, 10K you get 25K. All right, so I personally don't think that's great risk to reward ratio. I don't think that's like an amazing trade, but if you did put your stop loss at the prior high, yes, you would have netted a decent 4% move all the way down and you'll still be in that trade. Okay. So, anyways, congratulations if you scalped that. Well done. Now, how would you have entered that scalp if you did? Well, you would have said, hey, listen, market structure on the way up. See, we were looking at this, but we kind of just left gold, didn't we? It's going, high and low. Oh, Bing X is going off. High, low, high, high. And then we broke structure bearishly. We got a really deep retracement, that SFP, that prior high, okay, for a flurry down, for a nice little flurry down, all right? All right. So that actually would have been a better trade. This is what I mean by when I say, make sure you are waiting for your confirmations and make sure you're trading patiently. Because if you were looking to enter this trade at that retracement level, if you waited simply for that retracement and you didn't just limit order the zone, okay, you would have netted a way better trade off of that level. All right. So you would have got a trade that looks like this. So let's say you waited for that bar to close. Let's analyze this further because I'm pretty sure you would have got a confirmation in there um, as to market structure. So let's see on a 10 minute, did we get anything? Let's see on a 10 minute. So on a 10 minute, your 10 minute, oof, yeah, not great, not great. Actually, I tell a lie. So on a 10 minute, you have the most perfect. Okay, not the 10 minute. This is like 5 minute. Okay, bear with me one moment. I just want to show you this because people ask me all the time, how do you enter trades? How do you get those nice entries? This is exactly how you get those nice entries. So look, on the 5 minute, you got the most perfect trade. Okay, so first of all, you're waiting for this level. Okay, and then what you see on the 5 minute is that as you're coming to this high point, you can trace your market structure on the way up. You can see that your market structure is giving you higher high, higher low, higher high, higher low. Okay, this is your higher low. And then you get a high high. Then you get a flip in market structure, okay? All right, it wasn't a growth. Well, it's annoying because you didn't really get a nice retracement. You get a flip in market structure all the way down here, and then you get a retracement there, okay? So yes, if you entered on the break, I'm just gonna make this a solid line, so that you guys can see it clearly. I'm gonna put it 3 as well, put it a solid line. Now, if you entered off of that break, the breaking structure took place where? Well, the breaking structure took place right around here. Because if you entered on that break and you put your stop loss up here, that would have been a decent trade. But if you waited for the retracement, man, you'd have been waiting for a while, and you would have been gutted. You'd have been looking at your phone thinking, man, price is moving. So that gave you a nice 5.5 risk reward if you entered off the break. Now, if you waited for that retracement, personally, I would. It's already cut. It's already flushed that far down. I wouldn't have played with that. All right. All right. So gold. Let's see what the next golden opportunity might be. So for gold, again, we're still looking at this range high. I think we've obviously got a scalp off this level. That's great. That's done now. Done and dusted. Get rid of it. All right. But we're still looking at this range high. We've got our range low. We're kind of in equilibrium of our range right now. I'm still looking at this level. In the case that price comes up like this, the price rallies up, I'm going to be looking at this level, wait for a break in market structure there. As soon as I enter, you can either enter on the break or you can wait for a retracement for better risk to reward and flush that down. Now, that would be a juicy trade. That's what I'm looking out for. And that's why I've set my alert there. And my alert is at 2529. So if you do want to copy that and set an alert at that level, feel free. I'm also going to post this chart on. I'm going to post this chart on Discord. So if you do want access to this, um, feel free to join Discord, and you will have access to all the charts, all my commentaries, sort of on the price action as it develops. All right. All right. So what else am I looking out for as far as this range goes? Well, internally from this range, what do we expect from ranges? We expect it to oscillate. Ranges kind of acts like the sine curve or the cos curve when you talk about trigonometry in maths. So it goes up and down, up and down, up and down. We can get break of structures inside your range, all right, and it still be internal range structure. So as far as our market structure goes, what we have here is we've kind of had and we've kind of had something interesting here in gold as well, actually, which I've just realized, which is if we look at our structure on the way up, it goes high, low, high, all right. We've broken structure here. Okay, so theoretically, this is our retracement leg. Now, within our retracement leg, what looks to have happened is that we've formed this range. Okay, and not only have we formed this range, we've formed this range giving us our first high. We've had tap number one. Okay, and then after tap number one, we have broken structure. So we can see that bearish flipping structure here. Okay, now we've had that retracement leg, so we've got tap number one, tap number two, actually, and what we have as well here is tap number three. Okay, and that tap number three is lower than tap number one, which is giving us a Trinity model two. So if I had seen this, this would have been a beautiful place to enter a trade. Very nice place to enter a trade. Okay, so this is a very nice, and this makes me think price could actually be coming down here now. Price could be coming further down here before taking out this high, simply because we've kind of distributed right before tagging that level. Okay, so that's what I'm looking at the moment. That's how I see it at the moment. But not just that, it also looks like we've got a nice three tap model here as well. Tap number one, tap number two, tap number three. No, we didn't quite break structure yet. But we broke structure here. Okay, potentially now for retracement to further carry on further down. All right, so that's kind of how I'm reading gold at the moment. I would like to see this high get taken. If this high gets taken, this will give me more, confidence that we are heading back down. Simply because if this is simply the level that gets, taken and then we retrace and we come further down again, you know, we could easily just get, okay, let's say we come further down one more time, we could easily just get a flip, changing structure again and carrying on. And what that will do if we go to about maybe like a 3 hour, that will maintain our 3 hour structure. A 3 hour structure being something like this: a high, a low, a high, a low, and a high. Okay. Now that's the reason why I would like to see this high get taken. And if I see that high get taken, that will fill me with a lot more confidence. A lot more confidence. So that's what I'm looking out for. And let's see how the price action goes with gold. So gold is at a very interesting point at the moment, I think. Gold is at sort of a decisional level where we have to have our eyes on the chart. We have to be thinking, all right, if we are to catch a nice swing short trade here, this could be a runner. This could be one that we can hold for a week, maybe 2 weeks, and look to get a nice return off of it. These are the kind of trades that you catch early and then you can sit out for the rest of the month and say, "Do you know what, I'm good. I'm chilling." Why is that? That's because let's say we get a trade up there. Let's say we even have a bit of a leeway with our stop loss, give it a nice little leeway. Okay. Um, and give it a nice little leeway, 0.55% stop loss. Look at that. The target for that trade is a 17x. 17x. That's stupid. That is stupid. All right. So that's kind of how I'm reading it at the moment as far as the bearish scenario goes. Yes. As far as the bearish scenario goes. Now, in the case that we do not sweep that range high, so in the case this happens, so we get this low, we've broken structure here. Yes, great. We get this and we come back here. And what I'm simply going to do is look for the next leg down. Okay. I'm going to look for the next leg down, see if I can catch it perhaps around here, and flush it all the way down. But in order to do so, I do need to be careful. Why do I need to be careful? I need to be careful because I need to look at the higher time frame and see what the higher time frame structure is saying. Because the higher time frame structure looks like this. So we have a high, a low. I'm going to change the color in a second, don't worry. We have a high, high, low. And we have this flush here, which means we can come all the way down here, and still maintain bullish structure and follow up. So let's make that blue. Okay. So we could still do that on a higher time frame. In fact, I think this is a more realistic, higher time frame pull. Yeah, I think this is a more realistic higher time frame pull where we've got this going on. Okay. Now, so because of this, because this could be as simply a high low, and the objective, of course, of this high low is to test this weak high. All right, I'm going to be careful shorting around here. I'm going to be careful shorting around here because we could simply just be coming back to this zone, reacting off this zone before we carry on. So where am I going to put an alert? Well, I'm going to put an alert at that zone anyways because I want to know what price does as we come to that zone. Yes. All right. So internally, if we look at this expansion leg, our last expansion leg, what do we have? Well, we have a high, we have a low, okay. We do have a we do have a high and a low and another high, okay. But we have an SFP which would have rotated us back to the top, okay. So in terms of our structure, that's what that looks like. But if I go perhaps on a 12-hour now, if we look at the 12-hour structure, all of a sudden this high low and high high, it becomes invalid. So a 12-hour structure all of a sudden now looks like this. We have okay, so yeah, 12 hours not looking so good. Why? Because we actually don't have 12-hour structure here either. So let's look at the 18-hour. Okay, the 18-hour looks better. On the 18-hour, we have a higher high, a higher low, and a higher high there. So we're going to change that color. We're going to make that pink. Yeah. If this is our 18-hour structure, that means this becomes a key level to come back to and retrace to, aka this becomes a zone of interest. All right, this entire zone becomes a zone of interest, and we're going to call it a demand range. Okay. So this becomes a zone of interest. This looks a bit complicated at the moment, but these are the steps you have to look through when you're thinking about multi-time frame analysis and understanding what market structure is doing in all the various levels. So what that means, for our 18-hour structure is on the 18-hour, yes, we could simply come back, retrace, and carry on up. Okay, similar to the blue structure that we had earlier. Okay, so now because of that, we can plan some trades based off of that theory, based off of that idea. We already have a first trade based off of the PO3 idea. Now let's plan some trades based off of this idea. Well, if we're looking for continuation longs, where's that going to take place? Well, what we're going to do now is we're going to say, actually, if that's the high, yeah, then I'm going to see, do we have any zones in there first of all? I'm going to quickly look for some zones in there and see if we've got any notable zones, notable demand zones that we could potentially get a reaction from. Yes. So we've got demand zone number 1. I'm going to clear this and tidy this up. And oh, we already had that in there. Brilliant. Brilliant. All right. So this is analysis we've already done. So I'm going to extend this, make it a bit higher. 45-minute zone. Well, it's kind of a 4-hour zone now. So I'm going to change that to 4 hours. Okay, so we have a demand zone in there. That's a potential place for a reaction. And look at that. That's also exactly where we look to get that reaction point from there. So this could well be where we get that reaction from. All right. Let's see. Do we have anything else in there quickly before time runs out? All right. Obviously, we've got that daily zone over here. I think that's it. But feel free to check in your own time as well, see if you've got anything else. All right. So as far as that goes, what am I looking out for? Now I can get rid of these lines. All right. Get rid of that guy. Get rid of that guy. Come on, trading view. Get rid of that guy. I'm going to get rid of that guy. I'm going to get rid of that guy because I know what's going on. I'm also going to get rid of that guy. All right. And we're just going to say, well, these are potential areas for our zones. We're going to put a setup here for a potential long over here. In the case that we do come down. Okay. That's potential long. We're going to make that nice over there. We're going to stretch this along. This won't happen till I think probably about next week. That next week before we get this. All right. Another potential long idea over there. Okay, so we're just going to pop that in there. But the one that is, the one we can get recently, the trade that we can actually see in the next maybe this week, is we could actually get this long playing out. So this is another long position, which is just a rotation from our range low. All right, that's kind of what I'm looking out for, and of course. We've got a short position. Now, yes, we have other trades, 100,000%. You can open TradingView right now and place a winning trade. You can flip a coin right now and place a winning trade, and it could be a great trade. However, these are the trades that I think have a higher probability of taking place. Okay, so that's kind of what I'm looking out for. I hope you have found this useful. If you found this education in any way, shape, or form, feel free to hit that follow button, hit that subscribe button. Also got a YouTube channel now, so we're going to be doing live streams over there. Feel free to check that out. Subscribe to YouTube so that you can get your daily notifications. Now we're going to be trading here every single day, Monday to Friday. We're going to be killing these charts, so feel free to join the family. Otherwise, I will see you tomorrow.